Good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour. Let me just get my screen up for you. For those of you new to the trading room, welcome. Just a real quick overview of what you're looking at here. This is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the Raptor. The Raptor is the latest addition to the DTS family. And the Raptor actually incorporates elements of the other three birds into one trading tool. The charts you're looking at here are the NASDAQ. I'm also following soybeans and crude oil, but I'd be happy to take a look at any market that you're interested in. We just had the market open about a minute or so ago. Let's take a look here at the overnight. So this is our Raptor trading tool. And let's see, where did we leave off yesterday? Right about here. Oh, so actually, not too much in the way of an opening gap today. So the market closed somewhere around there. The Asian session fairly neutral, as was the European session. And a nice little trend change signal right here, about halfway through the European session, and that's it. So far, they're just kind of waffling a little bit. Kind of expecting the NQ to head a little bit lower today. Just kind of based on what we've been seeing on the daily charts. Hold on one second here. I'll build you a daily chart so you know what I'm talking about. So here's the NASDAQ daily chart, and this is what we've got. If you shoot a trend line across the top here, you can see that we're kind of intersected that trend line. And as such, you might expect the market to move a little bit lower, maybe challenge the trend line down here somewhere, perhaps see the market drift down to 4,200, maybe. But at any rate, we'll just see what gives this morning. Nothing so far. We did have an attempted rally. I rarely take the very first signal out of the gate, except on the Eagle. The Eagle Trend Trader, I will often make an exception for, because it's been designed to pick up trend trades. It tends to have a longer term outlook. This is our Hawk micro scalper, and you're going to see a bunch of yellow bars through here. Our filter is all broken up. The yellow bars are printing at more or less the same latitude. Yellow bars by their nature are neutral, and that makes me a little bit neutral on the market as well. So it looks like we've established a little bit of a trading range. Highs up here, lows down there. And anything within this trading range is going to be a little bit of a crapshoot. This is a demo room, however, so I will try to demonstrate the software as well as perhaps pointing out a decent signal here and there. But you can kind of expect them to waffle a little bit. You're going to notice the width of the bars are changing also. This is because of the dynamic equivolume bars. This is a new charting style available from Indicator Warehouse, and it will work on any chart, really. It doesn't matter whether you're using DTS or just regular time-based charts or tick charts or pretty much anything, really. And let me give you the link for some of these things if you're interested in learning more about them. You can go to that link right there. Jim's shooting us some advanced decline numbers. It looks as though we've got about 1340 on the buy and 1240 on the sell, so slightly positive. Well, more than slightly. That's a positive 1,000. That's actually fairly bullish on the surface anyway. Still waiting for a signal to print. Might be getting a failure signal here in the Raptor. We'll see. And working on sort of a trend change signal on the Falcon here. You can see it keeps waffling. Our trend line keeps changing color from green to red, depending on which way the bar ticks. The current bar is ticking. Oh, I should point out, for those of you who haven't been in the room before, all these signals develop the same way, regardless of the tool that you're watching. As the signal parameters are starting to be met, we're going to get a warning dot and an audio alert. And then when all the signal parameters are in place, we're going to get a triangle and a hash mark. So you can see warning dots here, followed by a triangle and a hash mark. Now, we don't necessarily take every single signal. We're looking for specific signals. For instance, right here, we just had a trend change signal and a late filter entry signal. That was actually a fairly strong signal. We could have set up to take it like that, and it looks like it's making a little bit of progress. I'll try to point out some of these signals as the session goes on. Oh, don't stop now. Come on, get up there. You're going to notice on the, there we go. You're going to notice on the Falcon as well that we have these lines on here. This is part of the Ultimate Support and Resistance Suite. This is, again, another add-on. It's not unique to the DTS system. You can use it on any chart that you want, time chart, tick chart, volume chart, whatever. And it forecasts the support and resistance areas for the current day, for the current trading session. No, they are not pivot points, and no, they are not Fibonacci levels. They are better. If they happen to coincide with a fib level or a pivot point, that's more by coincidence than design. Okay, what are we? We're about 10 minutes into the session. Okay, we should be getting something tradable by now. First micro macro cross signal, a high probability signal here on the hawk. The problem is, where do I cover this trade, right? I have very little structure below here. Let's see, maybe if I take that on a second push, I could cover it down there. I suspect this might turn into a macro pullback, which is why I'm a little leery about taking it at this level. And you can tell from the width of this bar also. All right, well, here, we're in a demo room. Let me demo. It is the first micro-macro cross signal. This is one of our highest probability signals on the hawk scalper. And the first micro-macro cross simply occurs when the micro line, that's this thin one, crosses the macro line and everything comes into sync. You see, we've got green bars, green trend line, green filter, a green signal. We're getting some selling activity up here. Look at how these bars are getting a little bit wider. All right, we just hit our break-even trigger. Come on, get up there. Don't fail now. Get up there. A little bit more. There we go. Okay, so that worked out all right. And actually having a little bit of follow through to it also. Oh, we had a trend signal here also on our Eagle Trend Trader. A nice little hard edge bounce with a red bar buy. Again, very high probability signal on the Eagle. And did this line up with the trend line also? No, not quite. So on the Eagle Trend Trader, we have this band in the back, and this gives us our directional bias. So when the soft edge is above the hard edge, we're looking to buy. When the soft edge is below the hard edge, we're primarily looking to sell. This signal that you see right here, these red bars printing with a green buy signal, very high probability signal. And you can see that one also had some pretty good follow through. I don't think we would have had much difficulty finding our profit target on that one. Nope, certainly not. So a pretty good morning so far. Had signals on the Hawk, the Falcon, the Eagle, and here on the Raptor we also had a hard edge bounce right here. That looks like it probably would have tripped approximately the same time as the Eagle signal was building. This tool up here, this is called the Geiger counter. It's essentially a tape reader. It allows you to see the time in sales. You can see that right here. There was a lot of buying activity. No doubt that was part of this rally here. And now they're more or less even up. You can see our needle is quite neutral. And a little bit more selling activity. A lot of times what we look for here are, we look for spikes in the histogram. So we either look for, islands of buying or selling, these plateaus that may develop. And what that tends to show us is stop running, actually. That the buyers and or sellers may be trying to run some stops before reversal. Okay, so now we're back at some resistance. Couple questions here. JK is asking, hi, good morning. Does this work on crude oil? If yes, can you show crude oil charts? Absolutely. Just 1 second here. Oh, you know what I can do? I'll just load crude oil here. And then you can see it on all three. I have crude on my other monitor. Chris is asking, what platform is this? This is NinjaTrader platform. This software only works on NinjaTrader. And I know we always get requests for MetaTrader and TradeStation. And it's not that we have anything against those trading platforms. It's just that NinjaTrader's backbone, its programming, is the only one sophisticated enough to support this software. There is a lot of stuff going on in the background. There's some very complex algorithms being processed behind the scenes. What you see on the screen here is only the bare minimum. There's about a half a dozen requirements that need to be met before a warning dot is even printed, never mind the complete signal. All right, so here's crude oil, and this is crude oil now on the Hawk scalper. let me turn off my Trade Manager. This tool that you see right here, this Trade Manager, I'll tell you about it a little bit more in just a moment. Invaluable trading tool. So let's see, just prior to the crude oil open this morning, we had a very nice first micro-macro cross signal. See, pretty easy to identify, right? Micro line crosses macro line, everything turns red, red signal, red filter, so on, and boom, down she goes. Working on a first micro-macro cross now to the upside. This one, again, a little bit trickier because where do we cover the trade, right? And crude oil being so crazy expensive, I can't afford to cover it that far. It looks like it's going to rally to our profit target, however. So there's crude oil on the Hawk Scalper. This is crude oil on the Falcon right here at the North American open, or the stock index open. We had a late filter entry signal. Very, very high probability signal on the Falcon swing trader. And the late filter entry signal occurs when the filter goes out of sync, comes back into sync, but the trend line never changes color. See that? Trend line changed, stayed the same color. Filter goes out of sync, comes back into line. We generate a signal, warning dot, triangle, hash mark. This is a signal that you can take with a great deal of confidence. And you can see no problem finding our high probability profit target, and actually even rallied to the median line on our support and resistance suite. We had an early trend change signal here about 15 minutes before crude's open, and then on the open we had what we call a proper trend change signal, and that broke our primary support line, and look at that, went all the way down to our secondary support before turning. So there's crude oil on the Falcon. Here's crude oil on the Eagle Trend Trader. A little bit choppier. If you were watching it in the overnight, though, we did get a couple of green bar sell signals. This is the reverse of the red bar buy that I just showed you on the NASDAQ. You would have obviously had to be a little bit patient with this. The green bar sell, again, one of our high probability signals. You probably want to cover it like that. You took a little bit of heat, but eventually found our high probability profit target just prior to the open. If you weren't watching it in the overnight, we did get a with trend signal right here, and that too found our high probability target right after the open. So very profitable morning in crude oil also. Here's crude oil from yesterday. Oh, we had a nice rule of three signal right here. That's almost textbook. This is our reversal signal. It's when you start publishing trades or signals counter to the band. So we have a bearish band and we print 1, 2, 3 signals to the contrary. That's called a rule of three signal. That's our counter trend signal. Crude oil is so darn expensive. There we go. And it too found our profit target. The thing with the counter trend signals is you don't always need to take them. You can always take the with trend signal. There's almost always going to be a with trend signal that prints after the counter trend signal. So you can always just use it as an early warning. All right, so there's crude, and last but not least, let's take a look at the Raptor. There's crude oil on the Raptor. And we had a trend change signal here. This is what we refer to as a soft edge buy. It's actually a little bit late, but we did get that telltale test of the extreme just before. That's this right here. This failure to head lower is a pretty clear indication that the market's going to try to head higher. Did get a trend change signal and a cloud crossover right here. Again, yeah, just right about this morning's open. So there was your signal on the Raptor for crude oil. So it looks like crude giving us some pretty good follow through on all our tools at the moment, which is good to see. Here, I think somebody else had a crude oil question before we leave crude. Steve is asking, do you think this will be able to work on Thinkorswim in the near future? Same problem, Steve. Out of all the trading platforms out there, Ninja is the only one whose programming is sophisticated enough to support the programming. I was going to show you, let me go back here to the MQ because this will make a better point. I'm going to show you the trade manager here. This trade manager is perhaps the most sophisticated piece of trading software available to the retail trader. It was actually the brainchild of Adam, the president of Indicator Warehouse. For years, he wanted a piece of software that would automate his trade management for him. And of course, there was nothing out there. Now, actually, we're starting to see copycats, but they're nowhere near as sophisticated as the trade manager is. So let me show you here what the trade manager does. So you've probably noticed these blue dots on the screen. You can turn them on and off. But these blue dots represent the trailing stops. You have 16 different stop strategies to choose from here. And they're all fully customizable. So right now I'm on the ATR strategy, and I can, adjust it, make it more or less aggressive, whatever I would like. So you have your trade management component, but more importantly than that, you also have your risk management component. Right down here, you have two trading modules. You have the risk percent mode and the manual mode. The risk percent mode will always contain your risk to this percentage amount. So currently I have it set at 2% of my trading capital. So here we're getting a red bar buy signal, which is a signal that we can sell as a failure. If I set it up with the stops at the stop strategy, you can see that my risk exposure is $270 and I'm trading a quantity of 2. If I choose to set the trade up a little bit tighter, let's say I set it up like this, oh, look, my risk amount stays the same, more or less. Right? It's $280, but what has changed? My quantity has changed. Now I can afford to trade 4 contracts. What if I want to run a really deep stop? Let's say I'm going to go like this. I'm going to put my stop way up here. Oops, went a little bit too far. Let's go up here. Oh, look, my risk stays the same. So my risk stays at $275, $280, about $300. But my quantity has changed. Right now I'm only trading a single contract. So this is what a lot of people don't understand about trading. A lot of people do the opposite. A lot of people will maintain a constant risk exposure by trading, say, 2 or 3 contracts all the time. But their risk amount, their risk exposure keeps changing. So if I were trading, say, 3 contracts all the time, and I did a trade like this, okay, I'd have $210 at risk, which is within my parameters. But if I risk it up here, oh, now all of a sudden I have nearly $400 at risk, which you've seen from the earlier example is more money than I can afford to lose. And then if I went even further, if I went to the wide stop up here, I'd be risking $700, which is a lot more money than I can afford to lose. So Trade Manager controls your risk for you automatically. This cannot be overstated, because by not controlling your risk, that's how 90% of traders blow up their trading accounts. Risk is the only thing that you have control over. You don't have control over the reward side. You only have control over the risk side of the equation. So if you take nothing else away with you this morning, remember that you have to control your risk amount. Never ever risk more than you can afford to lose. And like I say, the trade manager does that for you automatically. Steve was asking what time chart the crude oil chart was on. The charts, the brick size we use here, these are mean Renko bars. These are unique to Indicator Warehouse. And part of the DTS package, you can also purchase them separately. So they're not a time-based chart. They're a range style chart. We're running a 6-tick brick on the Hawk Scalper, 8-tick on the Falcon Swing Trader and the Raptor, and a 10 or 12-tick on the Eagle Trend Trader. I'll tell you the truth, when Adam first came to me about the mean Renko bars and he wanted me to start using them, I was reluctant because I was a 5-minute chart trader. That's all I'd ever watched were 5-minute charts. And he said, you know, use them. You're going to like them. And after a week of using them, I would be hard-pressed to go back to a 5-minute chart. The reason is the mean Renko bars make it so plain who is controlling the market, right? We can see that the market came down here, found some support, rallied up, came down. Oh, look, support came in earlier. So that tells me now that the buyers have control of the market. So when I get my trend change signal right here, I'm not too reluctant to take it, right? This is the type of information you can't get on a time-based chart. If the minute happens to fall at the wrong spot, or even a tick-based chart, right? If you set, depending on what you set your ticks on, you may or may not see that. But it's very obvious with the mean Renko charts. And like I say, these are all things that you can pick up at the link that I gave you. And hold on, I'll find it for you again for those of you who might have arrived a little bit later. There you go. You can find out a few more particulars along with pricing and things of that nature. So right now we're trading at our secondary resistance line, and we can see the market is struggling here. If it fails at this point, well, then I'll have a pretty good idea that the market is probably going to try to head a little bit lower. All right, so let's put that back on the shelf. Steve is asking, will this work on the Ninja demo account platform? Yes, absolutely. Good thing about NinjaTrader is their software is free until you start trading off of it. So if you use it to enter your orders, they charge you a license fee, which I suppose is only fair. But yeah, it'll work just fine on the sim. So if you're entering your orders off of, you know, MetaTrader or Thinkorswim or whatever, you can certainly run these charts in parallel. We do have owners who do that, who will trade their NinjaTrader platform, generate their signals, and then actually enter their signals on another trading platform. Steve is asking, so is that like a regular tick chart, like a 610 or a 233? No. You can use DTS on a tick chart, by the way. Let me just change the formatting here. For instance, let's say you wanted to run, I don't know, a 3-minute chart for your scalper. So you can still generate signals, right? It still will produce signals. And same thing if I went with a tick chart. Let's go with well, sure, 150, whatever. See, the system will still produce signals. And actually, that's not too bad. Nice macro pullback signal right there. Looks like that had some follow through to it. I suppose you could still consider that a first micro-macro cross. So it's still producing signals, but the only chart style you cannot use is point and figure charts. But the mean Renko bars were designed for DTS, which is why we tend to stick with them. Okay, you guys got a few more questions here. If I missed your question, be patient with me. I will find it. Okay, Chris was making a comment about the Okay, JK is asking, can you talk about the different charts and what they mean? Absolutely. So here in the top left corner, we have the Hawk Scalper, and don't worry, folks, we're not missing anything. There's no decent signal that's printed yet since the first signal that we had out of the open. So if anything interesting pops up, I will let you know. It looks like we might be getting a trend change signal. But the different charts, each of these charts are programmed to pick up a different trading environment. So here in the top left, we have the Hawk Scalper, top right, Falcon Swing Trader, bottom left, Eagle Trend Trader, bottom right is the Raptor, and the Raptor, as I mentioned earlier, is a blend, it's a hybrid. It incorporates elements of the Hawk, the Falcon, and the Eagle into one trading tool. This is not the same as taking, a 5-minute chart to scalp and a 30-minute chart to swing trade and a hourly chart to trend trade. This is actually specifically programmed to pick up scalp signals. This has been specifically programmed for swing signals, specifically programmed for trend signals. The programming has been tweaked, if you will, to pick up specific market conditions. So if you did, like the 5-minute and 15-minute and hourly thing, that would be a crude approximation. But these tools have actually been programmed this way. You know how some days when you're trading, your signal works just fine, and then other days it doesn't work at all? And you wonder, well, what's changed? Well, your signal obviously hasn't changed because you're using the same signal, right? So what has changed? Well, what's changed is the underlying market condition has changed, but you didn't realize it. So that's why we have 3 different tools. Just like diversification across your investment portfolio is a good thing. Diversification across your trading conditions are a good thing also. Overall, it reduces your risk. Okay, and JK's asking about the warning dots and such. All the signals develop the same way. So first thing that happens is you get a warning dot, that's this round thingy, and an audio alert. When all the signal parameters are met, you're going to get a triangle and a hash mark. here, triangle, hash mark. That tells you that all the trade conditions have been met and it's time to make a trading decision. So right here, I was hoping this one wouldn't develop quite so quickly. This is our first micro macro cross signal that I pointed out earlier. This is one of our high probability signals. And you can see we've got the warning dot, we got the triangle and hash mark. Everything is in sync. We got a red macro line, red micro line, red trend lines, red signals, red bar, red filter. Everything is in sync. That would be a signal that we would take, and then look at that, hit our high probability profit target within a minute or so. So there's one of our high probability signals on our scalper. And you can see warning dots, triangles, hash marks, same kind of deal here on the Falcon. But we're looking for a different set of signals here on the Falcon. Right now we're waiting for a trend change signal. I'm surprised it didn't print right here. But whatever, we'll have to wait a little bit longer. The trend change signal occurs when the trend line changes color. And essentially it's the first signal where everything comes into sync also. So we have the trend line change color here. Here's the up portion. Normally there's a down portion as the sellers try to fight it back. And then we come back. Oh, actually it occurred right here. We entered here, took a little bit of heat, but eventually went a little bit higher, hit our profit target. And I pointed this one out already, but here's another late filter entry signal. This one's textbook. The filter goes out of sync, comes back into sync. Trend line never changes color. Very nice and flat though. It's nice to see those trend lines get flat without changing color. Comes back with our signal. And a few minutes later we hit our profit objective. These profit targets are programmable, by the way, or you can set manual targets. I know some people who trade the support and resistance suite like to use manual targets, so they can set it up like this. And there you go. All right, back down to the primary resistance line. Probably see a little bit of a reaction there, I would think. JKS, okay, VIP question. Which of these systems, if any, utilizes volume? Well, we incorporate volume in a couple of ways. There are volume parameters within the programming, and now we've also included the dynamic equivolume bars. Equivolume bars, if you're not familiar with those, will print the bar depending on how much volume is associated with the bar. So wider bars mean more volume, narrow bars mean less volume. Typically, you tend to see wider bars produce at turning points. So when the bars start to get a little bit wide like that, that's showing us that there's a whole lot of buying and selling going on that particular bar. And of course, you can always, the nice thing about DTS too is that it's very friendly with other indicators. If you like to see volume, by all means, throw a volume on there. It will still work just fine. So you can get the volume histogram if you like. Or likewise, if you're into, say, stochastics. I know one of our traders likes fast stochastics. Go ahead, put it on there. What I always tell people though is the final qualifier is, does this help you make a decision? If this doesn't help you make a decision, get rid of it because you don't need it. Everything you need to make a decision and to trade profitably is on the chart. If you wait for your high probability signals like your first micro macro cross signal, we had one here. We had another, oops, wrong tool. We had another one right here. We had another one here. I won't include the macro pullback yet. We're just focusing on the first micro macro cross. We had one here right out of the open. So 1, 2, 3, 4 signals, all of them profitable. And what are we? We're only about half hour, 45 minutes into the session. And that's only one tool. So even, depending on your account size, but even if each one of those offered you the opportunity at $100 profit, well, there's $400 profit right there. Good question, though. Thanks for asking that. Question here from Ad. Are the bars after the trend change at which you're about to enter able to be programmed to execute automatically? No, not yet. We get requests for black box systems all the time. And I think there's one that's in the works. I'm not going to promise anything. I'll tell you the truth, though. And of course, this is just my personal opinion. But when it comes to trading money, I rather not leave the final decision to a computer. I want to be able to look at the chart and say, first micro macro cross, high probability signal. I'm gonna take that signal and I'm gonna place my stop loss wherever. I'm gonna place it up there, or I'm gonna place it here, or whatever I choose. The thing with the black box system is it doesn't take into account things like, have we had a test of the extreme yet? Or, are we able to run a tighter stop? Is the market condition such that I can perhaps, get away with running an extra contract? And it's not that difficult to find the entry signals. I know it looks a little confusing right now because it's all new to you, but let me show you. We have, where did I put it? We have what we call a cheat sheet. And here's the cheat sheet for the Hawk scalper. And you can see that we're really just looking for 5 signals, right? We're looking first micro macro cross. That's our highest probability signal. Macro pullback signal, very high probability signal. 4 arrow consolidation, another high probability signal. Post 4 arrow consolidation, which coincidentally was also another macro pullback, again, high probability signal. A red bar buy or a green bar sell. These are the 5 signals we concentrate on. You'll notice there were other signals that were printing, but we didn't pay any attention to those because these are the 5 that we focus on. Same is going to be true for the Hawk, or pardon me, the Falcon, the Eagle, the Raptor. We tend to focus just on the higher probability signals. David is asking, do I have a preference for static dome versus dynamic? No, not really. I don't follow the dome that much. I know some people like to see the order flow. They like to see what's called spoofing, where you see a big block of orders above or below the current price. I don't follow it that closely though. Oh, big move lower here off of that early signal that we had. No signal yet on the eagle. Blew right through the band. We're going to see a little bit of a reaction here somewhere. We're going to get back to the hard edge of the band, and that's going to produce a sell signal if in fact this market is set on heading lower today. You can see this tool up here is our trade forecaster, another add-on tool. You can use it on any chart, not just the DTS charts. And Trade Forecaster says we're currently in scalp mode, and we're going to be moving into trend mode in about 4 minutes time. Well, that would be good. Looks like according to this recent move, we may actually have gotten out of scalp mode a little bit early, because that was a pretty good decline. You'll see here the choppiness though before then when we were in scalp mode. So a nice little move lower there on the hawk, just waiting for our next signal to generate, and then we'll get all over that. Steve's asking, if I buy the system, will you set up the chart on Ninja demo system? Yeah, we have people who will do that for you. If you like, I can always share my workspace also. Sometimes people ask, hey Eric, can I have your workspace? Sure. It's just the template really. Oh, JK was asking about, he wasn't asking about the warning dots, he was asking about the Geiger counter. The Geiger counter is our tape reader. Again, this is an add-on tool. You can use it on any chart, and it shows you the order flow. So right now, very bearish. You can see our needle is turned red. The histogram very bearish also, and there we go. Market heading lower still. Nice cloud crossover here in hindsight. That would have been tough to take though, because we haven't had a test of the extreme yet. We'd be expecting a little bit of a retest here, but even so, that had exceptional follow through to it. With the Geiger counter, we tend to look for things like spikes, isolated spikes or plateaus in the histogram here, which will very often show us stop running, kind of show you a blowout of the buying or the selling. We don't have one yet. I'll point it out to you if we get one. Or when we get one. We tend to see them develop a few times a day. And I apologize, I'm a little bit behind here on some of your questions. JK is asking, can you show crude? Sure, we'll put crude back up here again. Steve is asking for my email address. Absolutely, if anybody has any questions, you can email me at eric@supportandresistance.com. There you go. I put that in the chat window for you. Okay, so here's crude oil now, kind of waffling a little bit. Actually working a first micro macro cross lower. Now crude oil, terribly expensive. I'd like to cover it up there, but Trade Manager won't let me, at least not at 2%. So I'm going to have to risk this a little bit closer. So again, first micro macro cross signal, you can see everything is in sync. We would anticipate the market should head a little bit lower here. The hash mark, by the way, is merely a suggested entry. You don't need to take the market right or your entry right on the hash mark. You can see in this case, if I offer up a couple of ticks, I can take my entry below the low. Crude oil moving a little bit sideways because we've got crude inventory report in about 10 minutes. Which, let's see here on the Eagle. Do we have a decent range? Yeah, sure, why not? I'm going to use the OCO function. We also have an OCO function here. I'm going to sell below there, and I'm going to buy above here. Now, when you use your OCO function, you need to remember these orders are live the moment you put them on your chart. I'm going to go with a wider stop. I hope that's wide enough. Maybe we'll make it a little bit wider. There we go. Ooh, that's a little bit cozy. That's a little bit too close to my entry. Let's split the difference. There we go. Okay, that's a little better. I don't want to, obviously get whipsawed, and crude oil going into the inventory report can be very unpredictable, shall we say. Trade Manager says we've got 120 minutes of trend. So about a 2-hour trend, no doubt that's waiting on the inventory report release. Okay, so here we just filled on our hawk trade. We took a 1-tick slip, so our break even is in line with our profit target. Come on, get down there. This should be a good inventory report because the market is very neutral. It's trading right in the middle of this range between the highs and lows. JK is asking, what in the system can I use to see the dry up of volume at key price levels? Well, it occurs like down here. And if I reduce the chart, this will be a little bit more obvious. But you see the width of the bars will change with the dynamic equivolume bars. Notice this bar right here that's currently forming on crude oil. See the width of this bar here on the Falcon? That tells me there is a lot of buying pressure going on here. How do I know it's buying pressure? Well, see what happened when this bar formed? It made this wick on the top, and now all of a sudden it's come back down, and it's trying to head lower, but obviously there's not very much follow through there. Same thing here on the Raptor. You can see very, very wide bar. That's suggesting that there's a lot of buying pressure on this bar. What we want to see at these reversal points is you'll get a wide bar, and the subsequent retest will be very light. There won't be a lot more market participation there. And that shows you that there's a whole lot of interest there and not very much follow through. See here, we had this bar where the buyers tried to force it up, sellers pushed it back down. There was a lot of volume on this bar. And we know volume precedes price, so where's the follow through? There isn't any. Goes up for 3 bars, and then look, we get another wider bar, again pressing lower, and what's the result of that? The market starts to head lower. So the dynamic equivolume bars are a great tool in that respect if you like to see the volume visually on your charts. That's a great way to see that unfold. Here too, see, the market came up, lots of volume. Where's the follow through? No follow through. Why? Because the sellers contributed a lot to that volume. Look at the next bar, more selling pressure, and then down they go. Okay, I'd very much like to see that stay neutral. Going into the inventory report, and what I'm going to do is I'm going to get a little bit more aggressive on my stop here. I haven't shown you how the trade manager actually rolls stops automatically for you. So I've gone with the parabolics, and what I'm going to do is I'm going to move my profit target just a little bit further away here, so hopefully you can see if this bar finishes lower, you'll see the trade manager automatically take that stop and roll it down. It'll keep rolling and rolling. Let's get this out of the way. There we go. Okay, come on, crude oil. I'm trying to make a point here. Steve is asking about the arrows. The arrows show you, yes, where the trade initiated, where it actually broke the hash mark. So did you see that? The bar finished lower. The trade manager automatically rolled my stops for me. So what that does is it frees you up to look at other charts, look at other markets, consider other trades. Knowing that this trade is being managed for you, I don't even need to watch it. And now we're going into inventory report, so I'm going to snap that one to break even in case there's a great big reversal out of that. Jim is saying on Trade Manager, how do you set the automatic trail versus the static stop order? With this function right here, this enabled tab, see how it turned my trailing stops off, and now my trailing stops are on. So once I enable them and accept them, it will manage my stops for me. Now I was already at break even, so when this bar completes, it will snap the trade to break even again, but I'm going to force it to break even manually. And with the break even function, you can set, break even plus 1, 2, or 3, or whatever you want. You can even set it to the negative, so you can go break even minus 2 or 3 ticks or whatever you want. So now I'm running a very liberal stop because I'm going to show you the OCO function here. And my stops are enabled, so as soon as the order gets filled, it will pick up my stop, automatically place a stop for me. Chris is asking, any trades on crude? Yes, this morning there were several trades on crude, several signals. We haven't been following crude, but we just did this first micro macro cross here, another first micro macro cross here, another first micro macro cross here. Is that? Oh, that's in the middle of the night. Yeah, so out of the open, we had a couple first micro macro crosses on the Hawk, and I think we also had a trend change signal on the Falcon. Yes, we did. The late filter entry and the trend change signal on the Falcon right here. And a trend change to the downside shortly, or about a minute before the open. And I'll leave the Geiger counter up here so that you can see once the inventory report hits the floor, which should be any second now. So we should see this thing start to go a little crazy. It'll start flip-flopping back and forth, back and forth. Today is inventory, isn't it? Wednesday? If it is, that's rather subdued. Ad is asking regarding the NQ chart that I had up. The system seems to have printed a couple of dash, triangle plus arrow down. Are these scale in points if already in an open position to increase contracts? You can treat it that way, but with the trade manager, it tends to maximize your position at the beginning. So for instance, if you set your risk exposure at 2% of your capital, it's going to initiate a position with 2%. So, once you're in a break-even position, you can reinitiate a position so that once again you risk 2%, but it's not necessarily a place that you automatically want to add to. Remember, you don't want to lose control of your risk exposure. That's how you blow up your account. But yes, they are places where you can add subsequent contracts. All right, I don't know what's going on with crude oil this morning, but that is not like a typical crude inventory report. JK is asking to see the 30-year bond. Hang on one second. I will load that up for you. Oh, no wonder. Jeff says crude inventory is tomorrow. Was there a holiday this week? Oh yeah, Columbus Day. Sorry. Yeah, right you are. Okay, so we can nix that. I'll show you something here on the OCO function. When you cancel the one, the other one automatically cancels, which of course is the whole point of having an OCO. Thanks, Jeff. We would have been waiting a while. Okay, I'm sorry, JK, your question came a little bit late, but I'll see if I can narrow it down. So JK is asking, so right where your arrow is, how come you have a red bar within green bars? Okay, I'm thinking you might be referring to the green bar cell here on the eagle. If not, it's just the way the programming prints the bars. There are certain parameters that have to be met for a bar to print red or green. And what the green bar cell, the reason the green bar cell is such a powerful signal on the eagle is, look at what it's telling you. Now, the eagle bars will also print with a hollow body or a solid body, as you can see. The hollow body is like your traditional bullish candle, right, where the close is above the open. And the solid body is like your traditional down candle, where the close is below the open. So what you're looking at here is you've got a market that's come down, and all of a sudden there's some buying going on, right? Buyers buy it up, sellers try to push it down, buyers buy it up, buy it up, buy it up. They buy it up so much that the bars actually start to print green, which is bullish. And then shortly after they start printing green, all of a sudden you get a sell signal. You get a red bar, or pardon me, a red warning dot, red triangle, and hash mark. So what this is showing you is that the buyers tried to take control and the sellers stomped on them hard. That's why this green bar sell is such a powerful signal, as is its inverse, the red bar buy. If you're looking at something like the Falcon here, we had our trend change signal occur right here. So we have our down, our up, our down. This is actually what we call an early trend change signal because it occurs just as the trend line changes over. But certain bars will print different colors depending on what parameters are being met. Yeah, thanks, Mark. I see Mark's comment here too about the inventory report being tomorrow. Yeah, sorry guys. Hey, way to go, Jim. Jim bagged 2 trades. He's up 40 ticks. Good job, man. I'm assuming that's on the YM. Bob is asking, do you have long runners on crude oil? Well, it depends on the market, of course. Typically, crude will make anywhere from 80 to 100 ticks a day. That's the typical range for crude oil. Haven't seen it yet today, but definitely had it yesterday. Going both ways, actually. Looks like we had about, what's that? We had 100 ticks up and then another 100 ticks down in the afternoon. So, yeah, it's doable. For sure it is. Oh, JK, good question. And if we did, I would buy it. JK asks, do you have a news indicator somewhere that can help you alert to upcoming news? Well, yes, actually we do. I'm only halfway joking here. I'll get you the link. So if you go to Indicator Warehouse and you roll down here to the bottom and you click Economic Calendar, see, you'll get the reminder, bookmark this page, and you'll see the reports and when they're due out. The thing with the reports, though, is it's filtering through which ones are important, which ones are likely to move the market, which ones are just reports. I think there was somebody who did a indicator like that gave you a notice, but I don't know, it needed a specific data feed or something. Dan is asking, which system do you suggest for scalping and the shortest stop? Well, scalping would be the Hawk microscalper right up here. Shortest stop, see, you guys are still thinking the old-fashioned way, where in order to protect myself, I need to keep a tight stop. But that's not how you do it. Unless you're trading a super tiny account where all you can risk is one contract all the time, you want to avoid keeping your stops overly tight because, let's see if I can find you an example here. The problem with DTS is it's so darn efficient, it usually picks up on immediate momentum. Okay, here we go. So if you're a typical trader and you say, oh, I got to keep my stops tight because I don't want to lose a lot of money, and you set up your trade like this, well, what happens? The market brings you in and then stops you out, and then a little while later goes to your profit target without you, right? Or you try it again, you say, oh, bad luck. So you try the next signal, and you try to keep it tight, and the market, well, let's say you didn't hit it there, but the market stops you out again, and then finally goes to your profit target. That's not what you want to do. You don't want to control your risk by making your stops overly tight. Or especially if you're going to try to do one of these, oh, somebody told me I need to have at least 3 times my reward to risk, so, oh, there's resistance there. I'd better put my stop right there so I can get a 3-to-1 type trade. That's foolish. The market brings you in, stops you out. Thank you very much. See you later. So what should you do? Well, you should control your risk, no question. But you control your risk by only risking a certain percentage of your account. If you don't want to risk 2% of your capital, risk 1%. Risk 0.5%. Whatever it is that makes you comfortable, but don't strangle your trade. This way you can set up your trade properly. You can set up your trade, you know, there hasn't been a real test of the extreme here. We haven't seen the market try to force prices lower, try to flush out the sellers. So why would I place my stop right here? I should at least give the trade a little breathing room. Ideally, the best structure is down there. Okay, so trade manager says I can't afford that. So let's try something a little bit like that. Okay, so, okay, $280. That's 2% of my trading capital. That is an amount that I can afford to lose. Now, whether $280 seems like a lot of money to you or not a lot of money to you, remember that trade manager will be based on your trading capital. I worked with a fellow, he had a $300,000 trading account. There was no way we had to risk 2% of his trading capital. He risked 0.25% per trade and still had ample position size. But if you're trading like a $10,000 account, okay, you're probably going to have to risk 2 to 4% of your trading capital in order to get a trade going, without strangling the trade, without setting the parameters so tight that you get yourself stopped out. For those times that the market brings you in, flounders a little bit, and then finally decides to go up to your profit objective. Remember, this is only a safety net. This is only here to preserve your capital if you are totally wrong about the trade. So you need to decide, where will I know that I am totally wrong about the trade? Well, like I said, the best spot is down here. And if you go with that, and trade manager says, oh, sorry, Eric, you can't afford it. Okay, well then maybe I have to let it go, and oh, here's another signal. Maybe I'll take that one. Can I risk that one all the way down here? Nope, still can't. Okay, we got to let that one go. And then we come down here and, oh, a red bar buy. I know a red bar buy is a little bit more aggressive signal, so I can probably risk it like that. Trade manager says, yeah, you can afford that. And then up goes the market. All right, this is a very important concept, and I know it's totally foreign to most of you because nobody has ever told you about it before. I think it's the best kept secret in trading. You want to be a successful trader, you need to control your risk, not keep your stops abnormally tight. Tony's saying, listen to Eric. Well, thanks for the endorsement, Tony. Dave's asking, do you have a trading room every day or just on Wednesday? Wednesday, we only have the public trading room. The rest of the week is for DTS owners. So we do have a trading room every day. And normally just for the morning session. The afternoon session, we leave it to you to trade, or it gives me an opportunity to do some trading also. All right, you guys, I hate to duck out on you a little bit early here, but I've got an appointment I need to get to. So we're going to close up shop here in just a moment. If somebody has a question, please type quickly. I'm going to throw the NASDAQ back up here. If you're following the NQ today, I still think we're going to see it move on lower, so I would be more bearish than bullish. You can take a look at buying any, or pardon me, selling any pullbacks that we might get. Crude oil, well, if the inventory is not until tomorrow, is likely to flounder a little bit or maybe head lower. And soybeans putting in a nice rally today. So a pretty good session all the way around, regardless of what you were looking at. Okay, you guys. Oh, JK, right. JK asked about the bonds. Let me get the bonds back up here for you. Mike is asking, can you leave the indicators running? Yes, absolutely. Oh, did you mean leave the room open and leave the indicators running? No, I can't leave the room open. I'm sorry. Okay, here's the 30-year bond. And here's the bonds on the Hawk Scalper. And let's see, here was the North American Open. Haven't generated a signal yet. A lot of times for the bonds, I'll use them more as a confirmation tool rather than actually trading them. A confirmation tool in the sense that if the bonds are going up, that confirms that the stock market should head lower. There is that inverse relationship. But no signal on the bonds this morning, not on the Hawk. Let's take a look here at the Falcon swing trader. And no signal here yet either. Should have had a trend change signal through here. The bonds, of course, at 31.25 a tick are kind of the odd man out. Oh, we did get a signal, however, on the Eagle. You see, this is why we have three different tools. Had a nice hard edge bounce right here on the Eagle. Everything's in sync. Green bars bouncing off the hard edge. That's a high probability signal. And the bonds, oops, out of range. Let's set it up like that. I've got a very aggressive target on the bonds, as you can see. You can dial that down, of course. Red bar buy signal a couple of days ago, so that would have set the tone. You could actually use the Eagle more as a position trading tool than a day trading tool here. So a couple of days ago, you got the signal that the bonds should be heading higher, and so far, so good. All right, you guys, we're going to button up the room. Oh, see this spike right here? That was the kind of spike I was talking about on the histogram. That's a little blowout on the NQ. So we can probably expect a little bit of profit taking, maybe a little bit of a reversal. All right, DTS owners, I'll see you in the trading room tomorrow morning. Thank you, everyone, for your attendance today, and I will see you either tomorrow or next week. Chris, we'll end with Chris's question. Do you know which tools work best for what market? Chris, in all honesty, they work on any market you can plot on NinjaTrader. I focus on the futures and the stock indices. We have traders who trade Forex. We have traders who trade the stock market. Quite honestly, we have traders who will even trade ETFs with the DTS system. The programming is not market specific. So if you can plot it on NinjaTrader, you can trade it. All right, you guys, we'll see you again. Thanks for your time. Bye for now.